How's it going? So, today's video decided to go over a little bit more on the actual analysis, the technical analysis that can be done on different charts, including some specific tickers that, as a general, we analyze the overall market. Now, it really does depend and it's different between if we're thinking crypto or we're thinking the US stock market. So in this case, we're looking at the SPY, which is, if you look at the price target right now, it's about the bid is 445, so that's about the area that it's at right now. But when we're thinking about the SPY, we're technically thinking about SPX, which is the true S&P 500. What is the S&P 500? Well, the S&P 500 is technically the top 500 companies in the United States and how they are trending and moving as a sum of the whole. So when we're looking at this, uh, well, first and foremost, you can say that it has been trending up very, very, very nicely. If we look at some of the big drops, well, this is the basically the March sell-off for COVID. So we can technically go back in history and find some specific details about um, the stock market, which can also give us an idea about the events that happened during that time. Now, this is the 2020 uh, March quarantine pandemic. Essentially, everyone was considering that we're all going to be stuck inside, which we were, and a lot of businesses wouldn't be able to profit from any sort of consumer goods. So this is the sell-off within that case scenario. This in itself is a good kind of gauge for the possibilities of the actual sell-off process. Now, if I want to figure out the percentage of drop this was, first and foremost, also, or second and foremost, I'm using Trading View, and this software is essentially a complete. It's free also, but it also is a paid subscription on the side for more features. For instance, this is a free feature here as a single window. If you want to have multiple windows with multiple stocks, that itself becomes a paid feature. However, you're free to use this just with a single stock at a time to analyze a specific stock one at a time. But sometimes you want to kind of compare between different stocks, which is where the power of the paid subscription happens. Okay, that out of the way. In TradingView, if you let me see, yeah, if you hold Shift and click, you're able to start from one location and drag to another location, and it'll give you a bunch of detail. For instance, how many bars went, right? So how many bars or how many days in this case? The bars are going to be the working days, no Saturdays and no Sundays, right? 33 days is including those particular weekends. So the 23 bars is in this case the working days because I have selected the 1 day per bar data, visual data. Now in this case, we dropped about 35%. That's a pretty big drop for a overall market. That would be considered a crash. Now the smaller ones that we see here and there, 8% here, that's a correction. So that's not a bad piece. In fact, when we move up a lot, as you can tell within the previous growth of about the 42% from where we dropped, right? There's got to be a cool down. You cannot always go up. It has to cool itself down. It's like a race car constantly driving at the max speed. The engine eventually will overheat if not cooled correctly. So with that in mind, we're considering drop levels, all right? Now, these are healthy drops, these are healthy drops, and we're having these healthy drops, but I do notice a little pattern in those drops, which I'll take a note earlier. Now, the cool thing is, personally, as a trader, I really do like to go back in time and also check out, let's say, the 2008 mortgage crisis, right? The crash in 2008 that affected the global market. This one was 50% drop, right? The 2020 COVID crisis was like a 32% drop, but now we're looking at a 56% drop. So the levels of the crash can be completely different based on the specific criteria of that crash. Okay, so that's one thing we want to go back to gauge. Every single stock is different. You cannot analyze the SPX and then go straight to Tesla and be like, okay, I know what a crash looks like because of SPX. I'm going to take a look if we have any 50% drops in Tesla. Not the same, right? Because the sentiment is different between the people involved in buying and purchasing that stock. Therefore, the sentiment really does judge the actual uh, growth trends and falling trends, the bull and bear trends between every individual stock. So, this is why we like to say you want to focus on five stocks, maybe 10 max, because you're going to end up staring at charts all day if you go any further than five. And if you do become a regular everyday trader, maybe you'll be looking at a bunch. Now, I have a list of stocks I'll show you later where I've saved them as on a watch list. But in a general sense, don't overburden yourself. Grab a couple of stocks that you are familiar with. Me personally, I'm a computer science major, computer geek in general. So I love technology, and that's where I focus. I focus on technology. I don't really do medical because those are very, very flimsy. Sometimes they can pass some sort of new medicine drug. Other times they can completely deny it, and that does affect the market directly. If they pass the stock is going to skyrocket. But if they fail, you're going to have a huge dip. So I don't play the medical field. I don't really play the agricultural field. Maybe I'll play the retail field here and there. I used to work in retail, so I'm familiar with it. But mostly tech stocks is my expertise. I understand my tech. I understand the possibilities and the types of new technology being introduced into the future. So I tend to really drift towards tech specific drops. So let's analyze the last few. In fact, notice the slope. This is where it really gets weird for me when I'm looking at this. Now, before our little crash here, we kind of have a natural flow, growth, small drop, growth, small drop, growth. You can see it here and here and here. We had also a drop, of course, the 2000 internet bubble grabbed us down a bit. This was a what, about a 50% drop as well. So expect some big event to generally bring us back down to a nice, more breathable location, right? So we'll talk about why it stopped here within this lower level, why it didn't go below this, based on the buyers willing to buy at that price, right? And many times you'll see that that will be a good trend to follow futuristically. Now, I see this as healthy. We can't always have stocks going up, they have to take a breather. And then again, we have an upwards movement. We got denied twice on the previous highs. And of course, also, we had a huge correction down in 2008. Now, the slope for these two is pretty healthy. We have ups and downs, but we are moving at a pretty decent slope, about a 45-degree angle, depending on the timeline that you're looking at. And we're going to see that continuously, especially in some cases. This is a bit of a smaller slope, so you're not going to see a very big movement here as compared to before. Maybe the cautious sentiment between the investors involved. But to really take a look at what's happening recently, we're kind of having a bit of a huge increase. Like, legitimately, an increase in slope for each of these. Now, this is extreme. I think this is unrealistic. Now, if you look at a lot of other data sets, you're going to notice that, for instance, Warren Buffett's indicator says that we are extremely overextended on the overbought, the overpriced market compared to the GDP in general. The GDP being essentially the production value and income of general companies and the government. I'm not a professional, so there's more details behind that. But the GDP is a general overall national value of how much and the worth of the whole market. And I believe it was like somewhere down here, like the GDP was around this area. So we're extremely overextended, and we have been for quite a lot of time. In fact, I believe the GDP actually showed that once we grew above it, we fell down below it into a nice trend. So this was the mark of the GDP. Of course, in a slanted manner, um, I'll have to show that and analyze that another day. I'm normally better with looking at data and analyzing it rather than trying to remember what it was. Because in the overall aspect, I am looking at thousands of different charts. I can't remember everything. So this is what really worries me in the end result here. We have a pretty good growth process, but good as in unrealistic. It continuously pushes up. Now, we've seen many times when we push in the natural flow, there is some event that pushes us back down, and that's natural. That's what we want to happen. But within the last 2015, small issue here, the drop was 16%, so not much there. Of course, we had the COVID here, 35%, which also 35% compared to the previous was not a big drop, considering the mortgage crisis with the 50% drop. So we kind of see this extreme growth. Now, this is the macro view. We've been analyzing the overall history of this S&P 500, top 500 companies. If I drop in and go into the micro view, there's a lot of things you can get from different details, right? We're seeing a bit of a hiccup in the market currently. Now, I'm not going to say that this is it, this is the end, we're going down, it's over, but I am going to say that when you see this, there's a couple of options that can guide you not only in the S&P, you don't have to be involved in the S&P, considering that you'd have to buy the S&P for 4,458, right? But this is a trend of the overall market. So I want to show a particular key connection that I can use with the S&P and, let's say, Tesla. So I'm going to go ahead and grab my Tesla, and we're going to take a look at some details. Now, I do have a lot of stuff drawn out, a lot of indicators that I'll have to go over with time. For now, I'm just going to go ahead and remove them and keep it clean, right? So we're seeing on the same bar, on the same process, first, S&P really got into a negative. Tesla is a strong stock as far as the sentiment of the people. People love Elon, people love Tesla. You can argue whether it's good or bad, whether the company is inflated or not, but a lot of people are in Tesla for the future value, not for the current value. That's an important concept to understand. People do look into the future very, very far, about 5-10 years forward. So when we see this multiple of bars starting to kind of slow Tesla down, now we're also seeing the negative huge bar here, a big fear factor here. When this S&P starts selling at a huge level, we're going to see a directional change. Now, from here, we don't know whether it's going to cool off like all the previous times, right? We had a, what is this, a 4% drop here. We're currently at a near 2% drop, but we're not sure if it's going to continue. However, you can deduce some information from this. You can consider if it continues to drop, Tesla has a high chance of continuing the drop process. Now, I'm using a specific type of, no, I'm using regular candles. Okay, good. I have to show you another of this. Down here, I'm using that. Okay, there we go. This is a lot more accurate here. I'll have to go over the different types of candles as well in the future. But if we're looking here, there's the exact correlation here when the market began to really drop. And this is on recent news that a lot of government officials are selling stock due to ethics concerns, or whatever the hell that means. But personally, I feel like even government is realizing that they cannot stop the inflation, that the market is overextended on the upside, and we're going to have a massive correction down, which does reflect in our Tesla stock here. Now, if you do look at Google, Apple, they're all going to have a similar level of a bar, of a red bar, which means we have a future to predict, right? Now, the current situation is, if we look at possible historic values in the micro level, we can find a nice support here because it was resistance before. Look how many times we tried to pass this particular line right here. Oops. Let me just get rid of this and this. Too many indicators. So we tried once, twice, 3 times we fell. We did go over on the 4th time, which is a kind of key value there. If we test a specific line 4 times, the 4th time is a really good indicator of a breakout. But the 3rd time is it's a breakout, or it will be a bounce off, which if it's a strong company, then you will know that it will come back. Tesla is a strong company, so that's why it came back. And then the 4th time will be the breakout. But if it's a weak company, that 3rd bounce down will be really dramatic, and it could lead us to some very, very, very low levels below, right? So right now we're near the testing level of here. So this is a safe bet. Now, I wouldn't buy with a red candle like this. Maybe I will wait to see what happens around this white support line. we could bounce off if the market is overall strong. If the market also responds with a positive impact, and we can kind of consider this line here based on these particular right tests here. Now, the S&P again is one of the strongest indicators, and it's always positive on the yearly manner. It does have some big corrections in many case scenarios, but in the overall perspective of the market, the S&P has always gone up. This is a safe haven for a lot of safe, low risk investors. Now, with the case being, if we decide to bounce or slow down near this white line, right? If the buyers come in and basically put the brakes on this negative trend, we will know that this is a good support for Tesla, a very good buying opportunity, right? We're now at the 736. That line is around the 729, 730 area. So that would be a good buy if I do see smaller red candles forming near our support level here. That is how I normally use the S&P to judge whether a specific stock will have a good moment in the next support underneath based on the overall strength of the market. But if the next the biggest issue here is if I see another red line essentially going down like this, and if I change the color here to emulate that red line, if I see some sort of red line like this, I will be scared because that would mean that we have closed underneath our support. This will not be a good scenario. We don't want to close on the daily underneath any support. I mean, we don't really want to close on the hourly normally on any important supports, right? That would mean more red to come, which would also mean that we would have Tesla breaking further down to another level around the next support here. So consider your risk tolerance. Currently, the risk is 729. If you buy right now at 736, you risk a bounce, a possible negative to 729, which is a pretty good risk. That's a $5 per share risk. But the growth would be at least $30 up because the top last area was 766. So because our risk is yay small, if I was to give it a little shift click here, the risk is about a less than a 1% fall, right? But our growth is a 4%. That is a good place to be. You want your upside percentage, your possible growth to be higher than your downside, right? But if our little S&P over here doesn't really close on a nice small candle, something around this value, right? I want it to start slowing down here, and I want it to continuously either go in a day-to-day process here, maybe in this case, yeah, we can see a small close underneath, but that would normally mean that we have a reversal on the way, right? So if we have a small movement down with a possible slight close down, eventually the support will act very strongly and people will buy back in, and then we'll find ourselves going back up. This will be the case where you have a small risk of 1% down, where our Tesla will bounce down if we decide to go in at 730. However, as per the previous situation, had we actually seen our beautiful S&P decide to really go down a bit and one or two quick bars underneath that support level, well, yeah, S&P might have a nice support here. Let's see, from here to here, call it a 1%, another 1% support down here. But our Tesla is going to have a much, much, much bigger drop down, about 10%. So if you decide to buy at 730, you end up holding a bag at 650, hoping that it'll go back up. So that is the response and kind of coordination between the S&P and any stock particular on the market. Any big stock, I would directly say. In fact, Tesla is in the S&P, so that's why I can actually correlate them very, very directly. The correlation on other stocks, smaller stocks like, I believe Walmart's not in it. I think Walmart isn't. No, Walmart is. Small restaurants, possibly. So, yeah, it depends. You'd have to take a look at what the fruit basket of stocks is. I don't know those by heart. I just know that Tesla was entered into the S&P, I believe, last year. which really posed its growth over the last 2 years. So that's how I can directly correlate S&P with our Tesla. But I really wouldn't buy anywhere until specifically our S&P responds to this line. I want to see a correction. I want to see this sort of bounce back. I don't want to see it go below. I can see it go below, but let's have it close above. We can go on underneath for a little bit, but let's see the buying pressure go back up and let us close above this particular support, because then we know the next bars are going to slow down and give us a nice movement back up, a nice reversal. Then I would consider looking at what Tesla is and having a buy-in because the risk, if our market goes down further, and I think at some point it will, because we haven't had a correction in a very long time. Again, looking back at the overall, we are at a huge slope up. So there's got to be something. There's got to be a correction. We had a correction here. We had a correction, small correction here, right? You had the big corrections in 2008. But and even here, we had a mini correction about what? I wouldn't call that mini. I'll call it a medium correction. 20% here. I think it was 60%, 16%, 18% here. So we haven't really had a big, you know, instance of a correction yet. And I've been very skeptical of the S&P, feeling that, it's a bit fake, in my opinion, considering the current situation in the whole US stock market. Jobs are low, inflation's high, money is being printed and provided as support for the citizens, which is great for the citizens, but in the overall market, they need to spend that money back into the market. Inflation's having a huge corrosive effect on that ability to buy, the buying power. People that are getting their stimulus checks and increased wages are actually just benefiting from the money printer going brr. So the case scenario is our market in a general sense is not healthy. But to see it go up as if it's perfectly healthy and even in some sort of renaissance moment here with such a high slope, I'm very skeptical. So I'm not going to really touch anything S&P related and potentially not stock related, because I am actually waiting for a pretty big correction. Now, if we kind of go back to the possibilities, right? 36 here that we saw for COVID, and then 50% for our mortgage crisis, 56, let's call it 60. So 30 to 60% possible downside. If we do experience a major correction, let's find out where that's going to go. Here, that's only 10%. So 30, we would probably, 25 is a good point, because notice that my line here on the side actually touches a resistance support location here. We could bounce off the hill before the COVID, right? So this would be a place I would place my guideline. This is a good support for our possible huge correction. However, if issues go much, 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 much worse than we expected, and we know there's some crazy things happening in the market now, we could see around the 60 again, not only looking at 60 but following my guide on the left, seeing where it coincides over here with some good supports, right? So this is a nice possible range. We could fall anywhere within these locations. So this would be my possible huge correction buy-in. Now, I might buy a little bit at the top here just to get a nice little entry point, but not a lot, because my expectations also are that our market is really under some huge stress. Now, if I kind of go back in time, this actually is nice if I even go further back in time, because yeah, the bottom of this is nice, but notice over here, we're getting close to where we were in our previous highs before the mortgage crisis and the internet bubble. So this is a good place, but maybe even nicer if we had that extra space here. We could even fall further. This would be a very strong support, so I will give it a nice purple color. Let's call it green. Green for catching, right? I don't believe this would hold on very well, so I'm going to call this a red zone, because if we pass this line, we're going straight down. And I'll get this into a blue, because this is a pretty nice support, but I can see it dropping down below. If we hover around this or underneath it for too long, we could drop even further. So even though in a major correction, I can see us dropping somewhere around here, potentially having a 5-10% chance to bounce off of this, but that's means 90% chance we're going to drop straight through it based on the possibilities of the issues in our general economy right now. But I do see a nice recovery within this space. We will have to essentially travel inside of these box locations here, which, I mean, consider buying S&P for 4,500 and ending up with half, less than half, right? 60% less, ending up with $1,800. You losing $2,700 off the bat during this correction. So again, my risk down for the S&P is huge, and based on the current news, banks selling off, government officials selling off, a lot of people selling off, and this emulated growth that doesn't seem natural to me. I feel like we're stepping closer to this huge correction down to the 30 to 60% range, which to me is kind of scary. So that's why I'm not involved too much in any long-term investments. I am doing some small, quick in and out, maybe a month, maybe a couple of weeks to make some money on the side. And I'm personally waiting as a buyer for that correction because I do want to join in on the growth of the S&P, but I don't want to risk anything of such a major drop. So I'm going to wait for these drops and probably buy on my way down, finding these particular supports. Like I would buy 10% of what I want here. I would buy maybe 70, 60% of what I want here. And if we do reach here, I'd buy the other 30, 40%, right? Or just buy in between to wait the upward movement. Maybe 10, 40, and 50 would be a better association there. So having this ability to find trends and possible growth, well, that's kind of a good indicator of being able to predict, trying to predict. You can't be 100% sure, but you are working with probability. This is the important factor here. You're working with probability on actually how your potential drops could be based on those. Now, other case scenario, we could still keep on trucking along, right? We don't have to drop. We don't have to have this negative. We do have a nice growing process here, right there. That's our trendy space. I'm going to probably expand that a little bit. We have this bouncing, and we could really have a pretty small dip down to 4,000, and that's a pretty good support in general. So we could drop down to around the 4,000, 4,100, and then have our merry recovery back up, right? Because that's what's happened multiple times before. So the level of the possible issues in our market can be very, very unpredictable, but it's good to have a good perspective. I would say this is a pretty good chance, but I would say this is a much larger chance. The more time that passes with all the problems around economy, we are looking for this larger correction down here, not just the bottom of this. If we have a correction to here and it actually bounces back up, well, we're continuing on the trend. We might continue going up and we can extend this and we'll have this sort of guideline for where we're going to go next. But if we break below this, we are looking down below for those particular huge correction spaces. So that's a little bit on how I use the S&P with correlation to other stocks to kind of get an idea. If we have that huge correction, I don't even want to talk about what's going to happen to Tesla. We do have some strong support below, but it is a long way down. Very long way down. If we break, let me get some particular placements here. Boom. Down here, we could see 400s again. We could see 200s again. And I highly doubt we'll go below 180. 200, 180 space would be a nice buy. So honestly, I am looking for a good correction in the market because I want some discount prices, you know what I mean? So that's why I'm not involved in any long term yet, but I am playing my cards on the short term growth of particular stocks that I've mentioned before in the short squeezes. And that's how I use this guide. There's a lot more to go through, but in the end, I will be trying to split these into pieces because it's already what, 30 minutes of content. I know people don't have the attention span for so much information at once. So I'll try to split this video into pieces. If I don't, then future videos have to be faster. But it's really hard to dedicate specific content and details into small segments, at least for me, because there's so many pieces to keep an eye on. I would be literally skimming over the important pieces just to reduce the amount of time for your viewing pleasure rather than your educational material. So that's it from me. I'm gonna stop this at the 30-minute mark. I hope you enjoy this and have a good day and make that monies.